Stop treating meme coins like lottery tickets. The reason you're losing money isn't bad luck. It's because you're gambling, not hunting.
Let's hunt.
A hunter has a system, process, and the right tools to find prey and avoid traps. In this video, I'm giving you the complete hunter's playbook for the meme coin wilderness. We'll use one platform called Axiom to systematically find opportunities, vet them for red flags, and manage risk like a professional. My name is Lewis, and if you're ready to stop guessing and start executing with a real strategy, then keep watching. Before we go any further though, there is something that you need to know. I am not a financial advisor, and nothing in this video should be considered financial or investment advice. It's just educational content intended to inform you about the meme coin craze and Axiom. If you want to get more content like this though, then be sure to smash that like button and also, of course, subscribe to the channel and ping that notification bell. Now, you probably know this, but most people trading meme coins are losing money. If you want to be the one who is on the other side of that trade though, you need to have the best information and the best tools that are available. Even in this unhinged market, the difference between winning and losing, it's not luck. What it is its preparation. Well, that and insider trading, of course. But that is a video on, that's for another day. Let's be real here. And so insider trading aside, the problem for most on-chain traders is twofold. First, you're dealing with information overload, trying to piece together signals from chaotic messes of X posts and Telegram channels and Discord servers. Second is that your tools are fragmented. You're using one platform to track wallets, another for charts, a Telegram bot to snipe new launches, and a separate DEX to make the swap. It's inefficient and frankly exhausting juggling all of these different things when you're trying to make trading decisions. And this is where Axiom comes in. It's an integrated, professional-grade trading terminal built to solve all of these problems. Based on Solana and backed by top-tier startup accelerator Y Combinator, Axiom is already generating massive revenue, hitting milestones like $1.5 million in a single day and over $100 million in total. So why is it gaining so much traction? Well, it's probably because Axiom has brought all of the tools that you need to master meme coin trading under one hood. It combines meme coin discovery, advanced charting, smart money tracking, and high-speed execution in one clean interface. And it's honestly a welcome upgrade for DeFi, where trench warriors have suffered for too long with important tools split across multiple platforms. And whereas early DEXs were just for swapping tokens, the new generation of platforms like Axiom are complete trading operating systems. They aggregate best-in-class technologies like using Hyperliquid's powerful order book for perpetual trading and wrap them into the kind of sleek integrated user experience that DeFi sorely needs. That's why I'm going to walk you through how to use Axiom's most powerful features step by step to find, vet, and trade meme coins with a systematic, risk-managed approach. And by the way, if you need any more convincing, Axiom has a points program that is widely expected to lead to a future airdrop. And if you remember how lucrative the Hyperliquid airdrop was, you're going to want to pay attention to this. Every action you take on Axiom to become a better trader also earns you a stake in its future success. The platform's revenue generously funds user incentives, like a rakeback program giving you up to 30% of your trading fees back, and as you know, a potential huge airdrop. Which is not bad, right? So get started by checking out our link in the description or by scanning the QR code right over there. So here on Axiom, we'll focus on the three components of your meme coin trading arsenal: Pulse dashboard for discovery, the trackers feature for following smart money, and the trading terminal for precision execution. First up is Pulse. Think of this as your mission control for what's new and trending on Solana. It's like the live new pairs feature on other sites, but it's built right into your trading terminal, making it much easier to scan the blockchain for new assets of interest. The Pulse dashboard is packed with the data that you need to instantly tell if something is worth a closer look, or if it's just another piece of junk. You get columns for things like a trending score, which tells you which tokens have the most momentum and mindshare at any given time. You also see volume and liquidity, two metrics no trader can afford to ignore. As you'll know, high volume means that people are interested. High liquidity means that you can actually get in and out of a trade without getting wrecked on the price. A token with a high trend score but rock bottom liquidity is a classic trap. There's hype, but not enough money in the pool to support any real trading. Then there's the holder count. A meme coin is nothing without a community to sustain its meme. So you would think that this number climbing fast is a huge green flag. Unfortunately though, it is incredibly easy to game the statistic because a holder here just means a unique wallet address, and you can create really as many of these wallets as you want. So you have to be very careful about inferring anything about a so-called community just from the holder count alone. Anyway, the whole point of Pulse is to cut down on the time that it takes to find a gem. This could be the difference between you getting in early and you buying the top. So you should really use it well. All right, so next up is another feature that no self-respecting meme coin flipper can do without. That is trackers. We all know the saying, follow the smart money. It's the simple idea that some traders are just better than everyone else. They get in early, they make bank, and they rarely miss. And so trackers lets you do exactly that. Axiom's built-in wallet stalking tool. You can plug in any wallet address or even an X handle, and Axiom will give you a live feed of what they're buying and selling. So, where do you find these GigaBrain wallets? Well, you start by looking at the top holders of coins that have already mooned, like WIF or Bonk. Then you go into SoulScan, find the wallets that got into these coins on the ground floor and held, and then just plug that into your tracker. You could also find alpha hunters on X who share addresses of consistently profitable traders. But don't get it twisted. This isn't a license to blindly copy every single move. A big balance doesn't make a wallet owner smart, and you'll see them making stupid moves all of the time. So think of trackers as a high-quality signal generator. When you see a wallet that you suspect is onto something buying a new coin, that's your cue to start your own investigation, which we'll get into in just a minute. Okay, so once you've found a token that you're interested in trading, you'll be using Axiom's trading terminal. It's clean, fast, and has everything that you need to navigate this market with precision. Let's talk about two things that you have to get right: order types and slippage. First, order types. For order types, you've got two main choices: market and limit orders. If you're new to this, a market order is your get me in now button. It buys at whatever the current price is. This could be very useful for when the market is moving quickly, which is basically always, especially when you're looking at tokens that were born 5 minutes ago. The downside is buying it at a potentially worse price. If a specific price level interests you though, then you should use a limit order. This gives you control by setting the exact price that you'll pay. The risk though is that your order might never actually get filled if the price doesn't come down to hit your level, which will leave you sidelined. Now we have to talk about slippage. This setting is where so many new traders get burned. Slippage is how much you're willing to let the price move between the moment that you click buy or sell and the moment that your transaction actually confirms on the blockchain. If you set it too low, like 1% on an illiquid token, then your transaction will fail 99% of the time. You'll pay the gas fee, but nothing will happen, and you'll be wondering where your order went. For reference, every brand new meme coin is highly illiquid, and in some cases, you may need to crank that slippage up, sometimes to 10% or maybe even to 15% or more, just to make sure that your buy goes through. If you want to make sure that your order does go through, then don't be afraid to adjust this setting. By putting together coin discovery with Pulse, wallet stalking with trackers, and fast execution all in one place, Axiom gets rid of the friction that makes you miss opportunities. It forces you to be more data-driven instead of just chasing pumps based off of emotion, which, let's face it, who hasn't been there? Okay, so we now know the tools. Now let's put them into a repeatable system. This is how you stop gambling and you start hunting. A gambler hopes for the best. A hunter has a plan. This process will help you find opportunities and, more importantly, avoid the minefield of scams and junk that make up most of this market. First, we need leads. We're looking for those initial signals. So I'm opening up Pulse. I'm not just sorting by the highest volume though. I'm looking for a specific recipe, a high trending score, but on a coin that still has a low market cap. That tells me that it's got momentum, but still has room to run. I also want to see a big spike in both volume and the number of holders in the last hour. That's the signature of accelerated interest. Then when I find a token that fits this profile, I immediately pivot to my trackers tab. Is anyone I follow actually buying this? If any of the whale wallets that you're stalking are getting in, then that is a strong confluence. Depending on how many people track that same wallet, this signal could actually become a self-fulfilling prophecy all on its own, thanks to copy trading. The key is to remain patient, and eventually you will have a real candidate. Of course, when you do have a hot lead from Pulse, trackers, or both, don't just ape in. This is where 90% of traders lose their money. You need to do a quick 5-minute vet to make sure that you are not about to donate your crypto to scammers. Thanks to Axiom, this is super fast. First, and this is the most important one, you want to check the liquidity. Is it locked or is it burned? You want to Google rug check for token screeners that flag smart contract problems. If the liquidity isn't locked, the developers can pull the rug out from underneath you at any second, sending the token to zero. Unlocked liquidity is a hard pass for me. Second, you want to check the holder distribution on SolScan. Who owns this thing? If you see the top 10 wallets holding like 40% of the supply, then that is a massive red flag. It means that a few insiders could dump on you and crash the price whenever they feel like it. Just like the holder count though, you don't want to believe your eyes if you see a meme with a very healthy looking holder distribution. Smart insiders know that they could just distribute their holdings across many different wallets to cover their tracks. And that's why you should use a tool like Bubble Maps to identify these wallet clusters. Third, you want to look at the contract itself. Is it renounced? A renounced contract means that the creator can't change the rules later, such as turning off your ability to sell, which is rude, but unfortunately very common. Renouncing the ability to do that is usually a sign of good faith. And then finally, and I really cannot stress how important this is, you want to do a vibe check. You want to click the links to their X and their Telegram, and you want to see, is there any sign of sentient life there? Or is it just a bunch of NPCs and LLMs spamming when moon? Are real humans having a good time? If engagement looks forced, or the vibe is off, or if it's literally just full of desperate bag holders, then probably a good idea to just get out of there, okay? You should also check for a website too. It doesn't have to be fancy, but there has to be something there with memetic power. Most meme coins though, they literally just stretch the meaning of meme to its limits. So unless you're scalping, which is trading small moves on low time frames, then what you want is something with a clear, funny, or compelling story. If it's just a cookie cutter template with no real narrative, it's probably a very low effort cash grab. Now, this checklist, it's not foolproof, but it will help you to dodge the most obvious and common scams out there, which is half the battle. Okay, now listen up, because this is the most important part of the entire video. You could be the best token picker in the world, but if your risk management sucks, you will go broke. This is how you actually stay in the game long enough to actually win. Don't get it wrong, we are here to speculate and to take crypto from other market participants, but they are all trying to take your crypto too. It's literally PvP, and it's honestly really hard. So you must only trade meme coins with crypto you are 100% willing to set on fire. Now, that's not a license to mess around with your crypto. Your number one goal is to set as little crypto on fire as possible. So here's my non-financial advice. Create a separate, siloed account for trading meme coins. This could be a new wallet or just a mental bucket. A good rule of thumb is to put no more than 5 to 15% of your total crypto portfolio into this bucket. This creates a firewall. If your meme coin trades all go to zero, and many of them will, it won't wipe you out or mess up your life. If you only remember one thing from this video, make it this. Amateurs look at how much that they can make. Pros think about how much that they can lose. This is called position sizing. The rule is really simple. Never risk more than 1 to 2% of your meme coin account on any single trade. Or if you're really, really confident about something, maybe you could go up to 5%. But typically it's 1 to 2. And let's just make this real with an example. Let's say that you've ring-fenced $2,000 in this new account. That's your high-risk capital, money that you can afford to lose. Using the 1% rule, the absolute most that you should put into any single meme coin trade is $20. Yes, $20. It sounds tiny, but it will keep you in the game. What this means is that you could be dead wrong 100 times in a row before you're washed out. Your success isn't about one massive win. And especially in the beginning, it's about surviving your next 100 trades. You will have a lot of small losses. This is normal. The goal is to survive them so that you're still standing for the next big winner that will pay all of those losses back, and then probably a lot more, to be honest. And that is how you build a bankroll. Beginners, they get excited about their entry. Pros, though, are obsessed with their exit. Before you even think about clicking on buy, you need to know exactly when you're going to sell, both to take profits and to cut your loss. For taking profits, you need a system. Hope, by the way, it's not a system. A good strategy is taking the initials out at 2 rule. So if you put in $20 and the token doubles to 40, you immediately sell half and then you get your initial $20 back. Boom, you're now playing with the house's money. The trade is completely risk-free at that point. And maybe if you're playing with small amounts of money that you don't really care too much about, then you don't have to do this and you could just let it ride a few more multiples before you start taking profits. But once you start dealing with a lot larger amounts of capital, then having this type of rule can really save you and really just give you the psychological freedom from, just being so caught up in the market and having all of your funds really just tied up in one single trade. Now, for the rest of your bag, though, which we call your moon bag, you want to have a tiered exit plan. You don't want to try to sell the absolute top. You may hit it occasionally, but with these small new meme coins, that is not a repeatable strategy. What is repeatable, though, is scaling out. So maybe you sell another chunk at a 3x and another at a 5x, letting the rest ride just in case it goes parabolic. Doing this will ensure that you take at least some profits off the table. And it'll also prevent you from doing the dreaded round trip. Now, for cutting losses, you need to have a stop loss. And by the way, you could also just say that your stop loss is going to be if the coin goes to 0, and then position size according to that. Now, since most DEXs don't have automated stop loss orders for brand new tokens, you need a mental stop loss. If you've heard traders throwing around the word invalidation before, that is what they're talking about. You go into a trade with an idea of where the price will go, of course, but the price doesn't always move in your favor immediately. You need to be able to give the trade some breathing room. But before you even enter, you got to ask, how far can the price go against me before my trade idea is proven wrong? That price level is your invalidation point. You identify it before you enter. And if the price hits it, you cut your position. Don't move your stop loss. This is super important. You just want to take the L. You don't want to have any hesitation and you don't want to have any emotion with this. You need to understand that that loss is simply the cost of doing business. You want to preserve what's left of your capital and move on to the next opportunity. Volatility is the lifeblood of the crypto market. As long as asset prices are flying all over the place, there is always another opportunity to capture those moves and make profit. Personally, and this is not financial advice, but for these lower market cap meme coins and other very low market cap coins, the volatility on them is usually very, very high, and you can see huge swings of 60, 70, 80, even 90%. So it could actually go down 70, 80, 90% before turning around and going all the way back up and doing multiples. And because of that, my personal strategy is I like to put in an amount that I'm comfortable losing if it happens to go to 0. And that way I don't need to even focus on the emotional volatility of having a stop loss or even the mental, volatility, I guess you could say, of having a mental stop loss. And it's just much easier that way. So that is what I personally do. But whatever you end up doing, it's important that you simply stick with your plan and that you don't give in to FOMO. And also that you make good use of Axiom because it will make surviving in the trenches so much easier for you. And of course, don't forget about our special Axiom deal that gives you 30% off your trading fees back, as well as puts you in line for a potential airdrop. All through the link in the description or the QR code on the screen. Now, if you want to learn more about the perils that await you on-chain in 2025, then you want to make sure that you've seen our report about the Libragate from earlier this year, or this classic rundown of on-chain market manipulation. Knowledge is power, folks. And so that's going to be it for me for now. As always, thank you for watching. Like and subscribe if you haven't already, and I'll see you in the next one. This is Lewis, signing off.